One. Hello, everyone. This is Stephen Kwan with the Coin Genius team and Coin Genius family. It is the end of July in 2020, and we're here for Genius Wednesday. Can check it out on YouTube, Coin Genius Discord, or coingenius.ai. And there's a lot of topics to talk about, and our usual host, who I guess is kind of me, Christina, is delayed, so I guess I'll be the host and speaker. JP was just kind enough to, I guess, talk about a story which you may or may not have heard of, but I guess I would let JP expand on that, where there's a lot of interesting pieces that have come together this week that may have been market movers, may have not been, but Visa welcoming Bitcoin specifically and possibly others, crypto, to its network. Grayscale adding Litecoin and Bitcoin Cash trusts. Gold and silver, I guess gold trading an all-time high and silver shooting up $6 in the past 2 weeks. Bitcoin, oh yeah, I guess Bitcoin is a story, right? Yes, it did break over $11,000 for those that are unfamiliar with it. So there's someone willing to buy an alphanumeric string of numbers for more than $11,000. If you're unfamiliar with Bitcoin and blockchain, it's worth learning about. You know, maybe it's investing for you, maybe it's for some, maybe it's not, but it's definitely something worth, in my opinion, just learning about. And that was definitely a story. Ethereum has maintained some of its leadership. The US equity market is continuing to hit all-time highs. And as I used to say on Thomson Reuters, if the equity market is hitting all-time highs, that would infer that the global economy is the best it's ever been. I don't know if I'm a believer in that, but that is what equity prices are telling you. And the other point of note that I would make this week is that the $600 of unemployment insurance that was given through the CARES Act to people receiving unemployment due to the COVID-19 pandemic ended on Friday. So for many, that they have $600 less to spend per week. And I do know that the Congress is in talks about possibly extending some or all of that benefit. I am not a politician, so I don't know exactly, but those would be, I guess, some of the keynotes for this week. Really, precious metals spiking, Bitcoin over 11,000. Visa, I guess on that to open, Mr. Joff Paradise, if he's on, would you like to talk a bit about the Visa news?
I would love to, Steve. Thanks a lot. And welcome to everyone today. Appreciate all you guys being here with us and the Coin Genius Network for putting this amazing opportunity on for everyone. And getting the knowledge and the mass adoption out there is crucial. And I think we're going to talk a little bit about that right now with Visa. Visa, of course, everyone heard about the PayPal. I'm sure that, that's news, old news now, that PayPal, Venmo will be adopting the crypto space. They're looking at, I think it's a Ethereum base, is from what I've read so far. And then Visa coming in. What a great way. It's funny though, they kept fighting it and closing all these other companies down that was using cryptocurrency to convert to their fiat for their Visa cards, and Estapo and some of the other companies were closed down because they were converting crypto, and Visa just shut them down without any warning. They just shut them all off, and that was it. And you see a lot of things going on in the debit card world right now, what we call prepaid world, debit cards on Visa. BitPay is switching over to MasterCard. Your Visa card at BitPay will no longer be accepted as you won't be able to load it as of July 31st this year, and you won't be able to use it as of December. So, and then you'll have to contact them if you do not delete your funds. So if you don't spend your money off of that card that you have sitting there, you could possibly lose it. Now, I don't think that BitPay would keep it, but you would have to find, tell them and show them that is yours, I'm sure, and then they would maybe transfer it over to the MasterCard. But as it is right now, they are not transferring the funds to MasterCard. I like Block Card. It's really a good card. I love using their card. I use it. I'm not in for those people that's not in the United States, there are cards that you can't get outside the US. So you need to make sure you do your due diligence on that. But I'm glad that Visa's finally coming around and saying, okay, we can't beat them, so we might as well join them. And they're coming back in. And I truly believe that this will help on mass adoption. When Visa card comes out there, it'll give us a huge boost, adoption boost, if you will. What about Bitcoin, Steve? I think are we gonna see a 30K plus, maybe 33 by the end of the year? What do you guys think about that? Our traders are all talking about crypto, and then are we gonna have a second wave? I got a lot of messages in the last couple of days. Oh, why are alts going down? Why are the alts suffering so bad? And I try to explain them. It's because when this is history, when Bitcoin goes up like it does, then the alts should go down. That's the way they're spending more on Bitcoin and the alts, and of course that's going to make the alts take a little bit of a less. But I think we're going to see a surge. I think we'll see a pump coming up, and I think we're on the beginning of a bull run. I'm a little bullish today on Bitcoin, and hopefully we will see that. But like Steve said, we are not financial analysts. We don't give financial advice. We tell you to do your due diligence, check out who you're going to use and how you're going to do it, and read and see if this is something for you, because it is a very volatile market. And there are a lot of variables that you need to know before you get into this market. But once you do, I think you'll see something that what we see something that's far greater than what most people see today. So without anything else, Dave, what do you think? You guys, what are you thinking about Bitcoin right now and the alts? You guys think we're going to go through a second wave of alts?
Well, yeah, yes and no. I mean, look, at the end of the day, I've been very outspoken on this Genius Wednesdays, that I was actually blown away by the fact that Bitcoin stayed in that range as long as it did, with the massive bullish news that we've had. Considering Bitcoin's adoption is basically, it's an option on its own adoption. Considering all of the various things that have happened, the OCC saying banks can custody, now Visa saying this, earlier the Paul Tudor Jones, the fact that it went through the halving and ended up with a higher difficulty rate in mining, and the transactions have completely recovered and the network is robust despite it having an inflation rate of under the supposed target of the Federal Reserve. Of course, the Federal Reserve doesn't give a crap about inflation anymore. Powell pretty much said that yesterday. So, whatever. So I'm very bullish on Bitcoin as that. The alts are an interesting situation. It's not remotely surprising that in Bitcoin terms, the alts would drop. I think the reality is the alts that have dropped in dollar terms are ones where they just got overextended. And so you have this, the basic FOMO culture, fear of missing out, for those who aren't familiar with that one, not to be confused with FUD, which is fear, uncertainty, and doubt. The FOMO culture is jump on what's hot, ride the momentum, and when it stops, jump off. So something like Link, which has a significant use case. We have fans on this call. I don't know if he's on right now. I can't tell, but one of his bigger fans explaining it, riding it from 1 all the way up to 8. It doesn't remotely surprise me that Link is down 20% off its highs at the same time as Bitcoin is rallying. Why? Because the FOMO buyers are like, okay, let's jump off of this. The new flavor of the month is, in this case, Bitcoin. So it's like, okay, great, we can play in Bitcoin anymore. And if you want to understand that, the best way to look at it isn't just the price action. And it's sad that Christine is not here, because she's always asking me for data to look at. One of the interesting things to look at is on the perpetual exchanges that exist overseas that U.S. investors are not allowed to trade on. But if you look at Bybit, BitMEX, etc., you'll notice that the funding rates, where it tells you essentially it's set based upon who's demanding more leverage is being demanded, what a surprise, from the long side than the short side right now. Now, we know all the long leverage got wiped out in March, so all of this is relatively new, but there's obviously a lot of excitement in that FOMO crowd because they're playing the high leverage on the long side again. That has a tendency often of ending in tears, but then again, a lot of people have gotten very rich doing it. So, by all means, am I not suggesting people jump in and do long leverage on Bitcoin? I actually am kind of hoping that we see a slow, steady, grind higher kind of rally through the rest of the year, as opposed to the nonsense of 10-20% a day every day until the air falls out and the FOMO people leave and it collapses again. So the point is that there is a lot of momentum play there, and that's why you see the alt versus it. But the base use case for Bitcoin, the basics adoption, is never been stronger. And so when you say it's never been stronger, and understand, not only are we still not at the all-time high, we're not even at the 2-year high, right? Because we hit 15,000 last year, and so in very briefly, but we hit it. So the fact is yes, I'm bullish on Bitcoin. I think it will take out the all-time high, if not in the fourth quarter, then by this time next year. I think it could substantially overshoot, but there's going to be a lot of volatility along the way. And as JP said, not investment advice. If I did give one piece of advice to anyone, it would be simple: don't have a zero exposure to the asset class. That's the only thing I would say, that I'm willing to say.
David and JP, I guess I'd like to add something on. It's something I've studied for a while, and I guess I've been a spread and relationships trader, manager in commodities for many, many, many years. I guess the easiest way for me to explain what many call Bitcoin dominance, or why did alts go down, why did Bitcoin go up. Think about this. If somebody buys gold, does silver go up? Maybe, maybe not. I can't tell you. If somebody buys platinum, does gold go up? Possibly. But essentially, over time, I think that, Bitcoin is its own entity. It's, it mimics, in my mind, a commodity the most, where it's mineable. There's no 1-800, I lost my Bitcoin number, and it is what it is. I believe the most attractive part that attracts many to it is just its liquidity pool. You can allocate $1 million, 10 million, 50 million very, very quickly, whereas with many others, one may not be able to, with the exception of a ticker named ETH. But that said, when Bitcoin has a dual, when it goes up, it generally drags the US dollar value of many projects up because of its trading relationship, where it's, how can I say, pegged to Tether, for lack of a better term, and most other projects are pegged to Bitcoin. So when you see extenuating moves such as a $2,000 rally, people wanted to buy Bitcoin. They didn't want to buy ABC and XYZ coin. And other days you may see XYZ coin go up 50% and Bitcoin stagnant. Why? Because that's what they want. Now, I'd like to add one note, and I guess I'm not an expert on all coins, far from it, but a wise man who I respect very much brought something to my attention yesterday, and it was actually it's the 28th largest project by market cap. I'm not too familiar with it, but I'll simply bring it up because it was noteworthy. It's called AMPL, and their website is ampleforth.org, AMPLEFORTH.org. I have no position in it for disclosure, never have. And I guess when I was reading about it, I guess to say that it's a $500 million project, it was impressive or shocking, whichever you want. I mean, I'm just reading some of the things right now. It says it's a digital currency that adjusts supply daily based on market conditions. It's a monetary policy which is innovative and an intersection of technology and economics. Those were two of its main points. And I'll go further to say how it works part. It says the number of ample you own can change each day. The ample protocol automatically adjusts supply in response to demand. When price is high, wallet balance increases. When price is low, wallet balance decreases. But you can never be diluted by supply inflation. Okay, so like I said, I don't know too much about the project, but I can look at a chart and say it had $1 billion valuation earlier this week and has been cut in half to a not shabby $500 million valuation.
400 now.
Oh, sorry.
400 now. Down
Okay,
20%
400.
today.
I beg to differ, but by any means, it's no small project. I don't know much about it, but I guess when I see funding on projects like that, it gives hope and worry to me, where I think that new projects, there's plenty of capital moving around that is willing to fund projects and ideas which show, promise or hope. On the other hand, I don't understand enough of the projects, I guess, that I'm unable to give valuations of that magnitude based on something that says your wallet balance is going to go up and down based on price. But that's my 2 cents. Like I said, I wish Ample Fourth the best. I have no position in them. I could not predict what price it could go to. It could be $100 billion company, or it could be zero. And I would bet that it'll be somewhere in between both. Just like when I hear people, what's my price prediction on Bitcoin? In the next year, my prediction is above $1 and below $1 million. So I think I have a good chance in that range. And I'll pass the mic
you can
to
stay
Jeremy
safe
Bourne.
there.
Yeah.
Well,
so it's interesting because I think we originally saw this was on the Coin Genius Insights Telegram channel, which not too many people know about. It's more kind of internal use right now, but wanted to share this a little bit. Let's see. Let me know if you guys can see my screen on a phone. So we'll see how this works out. You guys see this?
Yes, sir.
Yeah.
Perfect.
Yeah.
Nice,
So
Jeremy.
let's take a look. Right, we're looking at the gainers and losers. As we see, the top loser is Ample. That's 20 down, which is interesting. But it's interesting. This, every single week we can dive into this and look at some of the Coin Genius metrics and look at, Digitex, which is Digitex futures is up 21.3, Lend 18.5%. I think yesterday it was down about 12%. So there's a lot of volatility in some of these speculative DeFi projects, which makes it really interesting. A lot of money to be made and lost. Just trading momentum wise, I've been very successful in doing so recently, especially as some of these ones are getting listed on more futures exchanges, including that of Binance Futures. FXC, I have no idea what CHSB is. Not as exciting, but I mean, you're talking about Lend and Digitex. I mean, all these things around decentralized finance are doing incredibly well. A lot of speculation around it. And, we saw a little bit of surge in Ethereum. I've been saying this for a long time, which is if DeFi is a thing and it is going to be transformative in nature, what is it built on? Ethereum. Once the masses figure that out, Ethereum is going to moon. We started to see that, and now it's kind of become uninteresting and people are kind of moving towards some of these other more speculative plays. But I mean, I suspect Ethereum, just like Bitcoin, is going to gradually increase in price, not have tremendous spikes, but gradually increase. And we're going to eventually sit here and be having a conversation. We're going to be talking about how Ethereum's at 500 plus, and it's just a normal thing. Let's see here. So looking at some of the other stuff, we see new listings on HitBTC, a lot of movement, and through some of the wallets, Bitcoin wallets, as well as others. But I wanted to go through this and get your guys' feedback in terms of the Bitcoin stats. What is this telling us, right? We talk about the price, it's only up 0.1%. Transactions are up 8%. But when you look at the average send of BTC, it's minus 21.8%, and the volume is down 15.6% in BTC, and the volume in USD is down 15.5%. Average fee up 4.8%. So obviously the more congested the network and the more transactions, which, you have 8% increase in transactions. So maybe the average fee makes sense. So it's going up. The amount of wallets over a 24-hour period, 59,000 new wallets added, which is crazy. We're over 50 million Bitcoin wallets alone. The Bitcoin mine 1,000, so up 13.5, and then the daily miners revenue in BTC is up 13.4% due to the increase in price. So let's go around the horn. What is this telling you? You know, does the volume and the average send, all those kinds of things worry you? What is that indicative of? Maybe we'll start with David and kind of move around the horn.
Well, I do have one question, Jeremy. Which volume is that? Is that the volume in the network or the volume traded on exchanges?
Traded on exchanges. Yeah.
Yeah. So we've seen that at CoinRoutes. I mean, we had 2 days ago was our largest volume day for our clients through our platform, and we're relatively small, but we traded close to $50 million through our platform. But today, while it's down, it's still over $35 million through our platform. So, you know, we're still seeing elevated interest, and it generally, one of the iron laws of trading is volume and volatility are highly correlated.
Hey, David, I'm so sorry to interrupt. Can you fix, there's something happened with your camera. You just look like you're completely blurred out now for whatever reason.
It's gone?
Maybe it just smudged on your camera.
Is it okay now?
It's okay, but it's really fuzzy. So I don't know if it's just me.
Wipe off your camera.
There we go.
Is that better?
There, that's all it was.
Yeah. Okay. Yeah, so the volatility is highly correlated to volume traded. And in this market, which is as close to a group of hummingbirds as I've ever seen, namely, you know, very, you know, short attention spans, you know, move from project to project, trade to trade faster than any market I've ever been associated with. And by the way, when you compare that to OTC equities during the internet bubble, that's a hell of a comparison, by the way. The fact of the matter is that volumes dropping 15% means nothing because they were dramatically higher a couple days ago. I think they were up like 30 or 40%. So, you know, up 40, down 15, you know, that's a trade most people will take every day. I think that the mining stats are at this point boring only because it's more or less consistent. Slightly more congestion tells me there's more moving around the network, and that's probably good. Those those particular stats are indicative of everything we've seen. I haven't seen, in all of the statistics, I haven't seen anything to be particularly troubling or particularly rejoiceful, if that's the word for it. I just think it's, you know, steady as she goes. The use case is there. The price action is happening because, you know, look, we were in a range that was really tight. And Steve is fond of saying, you know, when Bitcoin's volatility goes below, you know, a lot of different individual S&P stocks, I think it was over 100, and below the S&P as a whole for a multi-week period, something is brewing, and we knew there'd be a big move, and so the move resolved to the upside, like some of us thought would happen. You know, here, who knows? You know, to me, it feels like 12,000 is sort of baked in the cake, and then after that, you know, I'm actually hoping for a retrenchment and a grind higher, but we'll see. I don't know. Hope is a bad business strategy, and I don't have any particular strong opinion now or that strong, except for another maybe 8% to the upside.
I think there's a new coin that came out called Hopium, so you should check that out. No, I'm kidding.
Yeah, but as a good white paper, then who knows? You know.
You know, there. I don't own any yet, and I'm not saying that I will, and I'm not endorsing it. But if you haven't checked out Revelant, they have an app for your phone for both Android and iPhone. They have a pretty good use case, and they have a very low market cap, and you can find them over on CoinGecko. They're not even listed on CoinMarketCap yet, but it's something to look into. You guys, all you coiners that are out there. If you're not, then I don't suggest you even go that route. But I'm with Steve, I'm with Dave, you know, looking at what you just showed us on the Coin Genius. And by the way, everyone, if you're not on the Telegram group of Coin Genius Insights, it's free to join, and I would suggest you join it because there's a lot of great information there. And of course, make sure you join the Coin Genius Network. But yeah, if you start looking at everything, the numbers are pretty much averaging out. We do have a resistance right now, I believe, at 12. As Dave was saying, we're getting a little bit of a resistance. We break through 12.6. I think we'll see. We might blast right through 13, 14 to 15, and then. But I think we need some fill in the gap. coming up, and I truly believe that we're going to get a little bit of a drawback, but then we should get a blast off. So let's see what happens. You know, if we all had a crystal ball, we all wouldn't probably be here. We'd be on a boat or a beach somewhere in Bali or somewhere where it's very expensive to be. So you don't want to be somewhere cheap when you got that much money, right? Anyway, but you know, we don't have a crystal ball, so it's why it's called a volatile market. You know, so let's see where it goes, guys. What do you think?
I would add my 2 cents on, with Bitcoin being, I guess, the name face, having the most name recognition. I've generally just told people that I talk to that are wanted to familiarize themselves with this is just really starting where some of the things I guess we look at where it's like, oh wow, you're going to be able to use Visa, or wow, there's an ATM that you can put money in and it will print you out a card, or you can deposit this or withdraw it from a bank, you know, a normal bank. I think that, you know, the namesake for places that people went originally, myself included, was Coinbase, or just, I guess for me, it's buying Bitcoin is, you know, kind of like buying gold. You know what it is, you've heard of it, but I think that there's many other diamonds in the rough, and it's essentially, my personal coin term was, it's exchange traded venture capital for non-accredited investors. And that's, I guess, a US term because you don't have to be an accredited investor to join an exchange. And I think anyone that is willing to put some time in and research a project or coin and learn about them, pretty much all of these started at zero. I mean, there was a point where Bitcoin was 1/1,000,000th of a cent. There was a point where Link was 1/1,000,000th of a cent, or Dogecoin or Litecoin or Ethereum. I'm sure there's a couple people on here that were on those ICOs when it was 100 Ethereum for $1. And it may sound far-fetched, but I think sometimes looking at, you know, actually taking a second where people, instead of just buying the hottest thing for their first transaction, is, you know, involving themselves in the research, i.e., what do they call here? DYOR, before doing something, and finding out if that's something of interest to that person. Maybe you research it for a day or an hour or a minute, and you think, oh, well, this isn't for me. Okay, I get it. It's not for everyone. Not everyone has equities. Not everyone has commodities. But I am a believer that I can tell you firsthand and through people I know, people that, you know, there are the stories where you invested $10 and guys lost all 10. And there's other stories where guys invested $20 and a year later had 50,000. So I think the opportunities for those that are willing to do some research is almost endless in this space. And I guess I don't give investment advice, but I think it's a space worth doing a little research on, to say the least.
Let me ask you,
Steve, can we
guys,
talk about that a bit? I'm sorry to be late, but I want to make sure
Oh,
that we
hello.
hit the agenda points.
Christina's
Hi,
here.
guys. Hi, guys. Sorry I'm late. I want to make sure that we hit the agenda points that we discussed in the dry run yesterday, which is around, around research and the data points of expected behavior, right? We spend a lot of time looking at this market. We understand what you can do differently here with regulations. We talked about event triggers and especially the entire Grayscale conversation. I don't know if you guys have touched on this already, but with Grayscale, a pretty well-known fund listing XRP, Bitcoin Cash, Litecoin, and Ethereum, which Steve out yesterday, are all mining coins, right? So there are commonalities between all of them. That is part of event triggers, and that is part of kind of the market, the price formations and things that Dave was talking about. So Steve, can you talk a little bit around the expected behavior? We talked around yesterday around the external causality of the event triggers, like when certain times of the day, certain days of the week, and those expected behaviors.
Sure. Yes. I I talked with David yesterday, who also is on this call, and if I'm mistaken, I'll please interject. But there are certain times of the day where I am a strong believer, and I think others have the exact data points to back this. But I'll talk in Eastern Standard Time, US. So between 8 o'clock and 8:30 Eastern Time, you have gold, silver, currencies, and US Treasuries, quote unquote, open. Although globex opens at 5 p.m. each night and closes at, opens at 6 p.m., closes at 5:15 p.m. the next day. Those are obviously two important times which many may or may not be aware of, so you can notate those. 6 p.m. Eastern each night, Sunday through Friday, open, and the close is 5:15 p.m. Why are those important? Because those are when the proverbial margin clerks, or the CME algorithm that determines whether, as my friend puts it, customers are able to meet the CME's margin requirements, are usually covered. Positions are covered if they are not able to. Also, the number one, in my opinion, is the US equity market, which opens at 9:30 Eastern. And I'd say an hour prior to that, where you have, again, the other major FX, treasury, metals, crude, petroleum opening. That's just how things have been, I guess, where people have market on open orders, market on close orders, and you will see a lot of price discovery. And as David so eloquently pointed out yesterday, you essentially have 16 hours of news packed into 1 hour, where the next 6 hours you have 1 hour of news in each hour. And one could look and overlay this, or you could talk to some people in the CoinGenius data and analytics side, that I would be willing to bet 1 Satoshi of the least expensive crypto coin that you might see a little more volume around those times. Also, since crypto is not I guess it is 24 hours, there's technically no open or close for many exchanges. There are times of importance where, I guess, continents are seemingly waking up or going to sleep. And I was taught in trading and commodities that the more people you have, quote unquote, awake, the busier or more volume there tends to be. So in precious metals, that generally speaking was between 6 a.m. and 10 a.m. Eastern. But I guess one could gather their own opinions, and they can talk to people at CoinGenius or on the CoinGenius network, or they could simply do their own research to see if any of these are something that they want to find. But I guess that's what I'm saying in terms of blockchain and cryptocurrency. Whether you want to talk to someone, you want to do it yourself, these are all things where there's not a lot of information saying, hey, here's a correlation between when US equities open and Bitcoin volume. Or, hey, I've noticed that Bitcoin tends to have really large spikes or drops on as soon as the weekend comes. Why? Maybe because some of the Wall Street firms don't provide the same level of liquidity in the markets as they do during the week. Why? I don't know. They just don't.
Steve,
or so I've heard. But yes.
You might want to add in there too, look at the $75 million. I won't say the exchange, but they closed on everyone. They closed their margin. So they closed on 75 million. And that's just one exchange. How much was actually closed out on the other exchanges? So that also can be a little bit to do with it. Maybe, and I don't know if that was a cash grab or you know, if they're just trying to up the volume or what there.
Well, I would agree. I think that with cryptocurrency, since there's so many exchanges that are interlinked and so many firms that are gathering, you know, the most popular exchanges APIs and then overlaying that with CME futures and OTC trades and things that are on the blockchain where we might, or the exchanges may not actually see that as a dollar volume, but I can assure you that oftentimes two parties who trust each other may exchange, let's just say, Bitcoin for Ethereum, and it's just an exchange on a blockchain. You send A to me, I send B to you. Doesn't ever show up as a set US dollar price. So that's the intriguing thing where, like I said, JP, I would agree with you, and I think that that transaction most likely put some ripples, no pun intended, in other markets because it is a significant dollar amount. I think especially in the cryptocurrency exchange world where sometimes the volumes can seemingly be spectacularly unbelievable. So I have a
Hey, Steve?
question. Yes.
So I have two main things that I really want to talk to you about. One is the Coin Genius breakthrough this week with our VIX. And the second part is I really would love to hear from David around how he was able to identify the order book shifts and the coiled spring theory that he talked about. Can you give a little bit? I just posted the link. I know this is a secret analytics, Coin Genius analytics link is not public yet, but I posted the link to our VIX correlation, and it has some of the other correlations that we look at, the data points. Can you explain what we found this week and why we're so excited about the VIX correlation?
Sure. Well, the head of, I guess, what do they call it? The CTO, a brilliant guy named Russ Wilcox. I don't know if he's on right now, but he would be one of the brightest and most eloquently spoken technology minds that I've had the pleasure of talking to. And he is a very technical person. For instance, I am not. I guess I have a lot of experience and track record, but I wasn't really sure that. I thought API was a coin. I didn't know it was actually a data feed until a few years ago. But on a serious note, he looked at some of the things that I had talked about were gold and the VIX and equities may or may not have correlations. I guess you would have to take a peek at the Coin Genius website and see for yourself. But he developed or is in the process of developing a essentially model that is predictive of the VIX with various inputs, which could be Bitcoin, it could be equities, it could be crude oil, and we are able to essentially put an input in, see what's working, and have something where I have yet to see someone that predicted the VIX close, even just on the right side, saying up or down, accurately that many days in a row. And I would give a shout out to Russ Wilcox. And I don't want to spill all the beans, but I would say that it was very impressive to me to actually see a couple of my ideas where using the past prices of gold, combining that and being able to predict the VIX, well, that's not something I had heard many people talk of prior to this. But when one puts data in and actually finds numbers and then can prove those and develop a track record, then all of a sudden eyes start to open. And that's what Russ and the data science team is one of the things they're working on. And Christina, what was your next question?
Yeah,
regarding-
so yep, so number one, which is the VIX. So just to clarify for everyone on the line, CoinGenius looks at the data of this as a 24/7 landscape with planned predictable event triggers laid on top of that. And then we look for pattern recognition. One of the things that I don't have yet is the ability to analyze these order book shifts and see what David saw, which is the volume coiled spring kind of consolidation factor that he was able to say that 12K is more or less baked in, and he's able to see that in the charts. I need to unpack it from the data side. So David, do you mind taking the microphone and explaining that?
This is hardly my insight. There are many people who have talked about this, but basically, technicians and technical analysis is one of those things that I'll tell you. I've seen it work with people who are intelligent about it, and it's more of an art than a science in some respects. And I ran statistical arbitrage trading for over a decade, so understand that I've never put my own money on it. But what I have seen is a few things that matter. The reason in Bitcoin, there's a formation they call a pennant formation, where the volatility starts to compress and the range starts to compress. And generally that leads to a big move one way or the other. And the magnitude of that move has to do with the amount of time. Now, the intuition behind that and why it actually does tend to work, although it's infrequent enough to get really good results on very proper back tests, the reason it works is because of leverage. The longer a product that is used to trading with high volatility trades at below trend volatility, the more people sell volatility. The more people who sell volatility, the more likely it is that they're going to be forced into price insensitive buying or selling when it does move. So on March 12th, we saw this on the downside, where basically there was forced liquidations, and once you're in forced liquidation mode, you have to sell, and selling will happen at any price. But it can happen on up moves as well. People who have sold volatility or who have shorted effectively synthetically short volatility end up in a situation where they have to buy to cover. And whenever you have price insensitive orders in the marketplace, you have the possibility for outsized moves. So generally speaking, when you have what we were talking about for weeks here, Steve and I mostly, but JP as well, you see a situation where frankly people have sold volatility, or the inverse are people who are, oh my God, I'm only willing to buy when it's moving. And so they jump in when it's moving. The result of all that is a large move. And so my personal feeling that technically there's not a whole lot of resistance, because every time it's been in between 11 and 12,000, it hasn't been there for very long. That's why I'm saying it could stop here. I mean, I'm not dramatically saying it. I have put my money where my mouth is a little bit, but the reality is that the fact is it was at a very low vol for a very long period of time. And anytime they tried to break it, every time there was like a kind of transaction or a story, remember the story of a Satoshi wallet, that was out, was it 2 months ago? Oh my God, all of those coins are going to get sold. The truth is, I said at the time that if in fact Satoshi did want to sell, my guess is between Paul Tudor Jones and the hedge fund community, they would find that as the opportunity of a lifetime to buy. And so, I'm not nearly as afraid of that as others. On the other hand, obviously I don't know who the hell Satoshi is. Nobody does. We don't know if the coins are still active, if they're still a human, whatever. But the reality is people who get, weak-kneed about those sorts of things are part of what makes the market. But we did see a very tight trading range for a long period of time. And we did see leverage bled out of the system in a system that has tended to have significantly higher leverage. So those are both factors that indicate the width of the move. And the width of the move that would be predicted by it would be to, somewhere in the 12 range. I think, JP said his friends are thinking like 12.6 is somewhere. But whatever it is, that's the reason. It's not anything that is particularly insightful on my part, but it is something that I've been talking about. So I haven't changed my mind. We'll put it that way.
I love it. So Dave, that helps me a lot from the data points and what to look for the pattern recognition. This is basically the opposite of what we talked about yesterday, which is your phrase external causality. Can you explain external causality and price formations and event triggers for me?
Yeah. So in statistics is a wonderful thing. People, it's like you'll say this is correlated to this, and like correlations that are obvious are, I mentioned one earlier before you got here, Christina, which is high volatility is highly correlated to high volume, right? The more people are, and it's self-reinforcing. The more things move, the more people want to trade. Therefore, you get lots more volume. That's both upside and downside. Other things like Bitcoin is correlated to Ethereum. Well, it is, right? Interest in the crypto space is correlated. But there could be an external feature where, let's say, a whale decided they want to sell a pile of Ethereum and buy Bitcoin, or sell a pile of Bitcoin to sell Ethereum, will break that correlation. Why? Because there's an external event that's sitting behind. The first lesson in any good stats class is always correlation does not equal causality. Causality is when something literally makes something else happen, and correlation is when something happens and something else tends to happen at the same time. If there's external correlations, such as Federal Reserve deciding to print, multiple trillions of dollars, or yesterday Powell saying we're going to stay accommodative until the virus and all the economic things are over, that's an external causality which would make things like gold, silver, Bitcoin all go up. Whether or not they've been negatively correlated or positively correlated in the short term, that is a causal event that should make them all go up. And so that's what we were talking about. There are certain things that are external causes, such as rampant money printing, such as distrust of governments, things like that.
Beautiful.
I've
Thank you
never
so
heard
much.
of rampant money printing. I can't imagine what world they do that in. I mean, it's almost unfathomable. What?
Well, according to J.P. Morgan, Stephanie Kelton, who wrote the book on modern monetary theory, is going to be very important in the next administration. So there you have it.
Well, hey, David, what's a
So I have
trillion
a
between
question.
friends?
I know, right? It's definitely not going to, God, this is going to be a really fun 12 to 18 months to plot this all out on data points. So David, I asked you yesterday, what would you do if you had your own little data science team, your own little team? What would you do? And you said, well, I've got my own. We need to activate it and kind of collaborate. I'd like to offer the same question to GP. GP is green suite for all of your traders. If you just had a data science team able to look into some of these theories and check out the data, what would you use your data science team for? What would you task CoinGenius with to dig in?
Well, I think I would love to study the, give you an idea, all the chatter that's going on about different cryptocurrencies. If that could be studied and then narrowed down to the top 3, 5, 10 different cryptos, that would be kind of cool to do. And seeing what the chatter is out there on all the different, not just social media sites, but also on TradingView and some of the other ones, I think that on some of the exchanges, where they're the chats, and study those chats to see where that's going. And then also the pairing, where it's going. I think that would be really cool to have some sort of analytics and data on that. If we're going to talk about casualties next, I'd like to chime in on that one because I have something that you guys would be interested in.
Please go right ahead.
Well, I don't know if people are aware of what's in the cryptocurrency criminal activity that's going on. So far, I've seen reports of over 1.36 billion in crypto was stolen in the first part of 2020. If that continues, it will be far greater than the 4.5 billion that was lost in 2019. So security is very, very, very important on your cryptocurrency, and understanding that crypto is gone. And so casualties can be us. Keeping cryptocurrency on your phone in a wallet keeping and not doing anything with it. If you're not a trader, you're not trading with it. Why would you have it on an exchange? Why would you have it just sitting in a hot wallet somewhere on the internet? So it's important that you keep your private keys separately than you do your cold storage wallets. It's important that you use top security. I don't use GA. I like to use other two factors for that, and keep things off your phones, because phones, look at AT&T. Back last year, AT&T has a huge lawsuit because people were going in and duplicating. It's called hijacking phones and duplicating SIM cards. And a lot of this, these people lost millions and millions of dollars has been lost. And like I said, 1.36 billion the first of this year. So, big warning for all of you and everybody on this call and everybody that listens to this. You have to realize that you need to think about security, because when you become your own bank, it also comes with a lot of responsibility. And so, having an all phones are encrypted, by the way, but it depends on if they use it or not. Having an encrypted phone is one thing, that's great, but I think we need better security, and AT&T is going to find that out. They're the big boys. And I also talk about these big companies that have just shunned us off, because you look at AT&T, how to get good service with any of these companies. They think they're the only guys on the block, and somebody's going to come out hopefully one day with a better way of doing it. And with Samsung coming out with wallets now that are encrypted to put on your phone, again, if you're not going to do anything with your crypto, why in the world would you have it sitting somewhere that, even though you might have quicker access through your phone, why would you even do that? So Trezor, Ledger, there's different cold storage wallets out there. You can even get them on a card today. Swiss Card, I think, has a great option. So you have different ways of storing your cryptocurrency and not having it out there on an exchange or having it in a hot wallet where it's volatile.
JP, can I add something? And like I said, I don't know a ton. No, this is actually, I try to always put it in layman terms too, where I've heard, through various discords, people like, oh, somebody got into this, or there was a virus on here. I would ask this to all the listeners. If one left a wallet with $10,000 in cash in it at your local restaurant, bar, or store, would you expect it to be there tomorrow? I don't know. Like, I don't live in 1,000 places. I don't know. Some people probably yes. Many would say no. And a la what JP is just saying, if that's not something that one would do normally, leaving large amounts of cash and credit cards in a wallet and then just leaving it at your favorite store or restaurant, then why do it with something else that's of value? Would I leave 10 gold coins at the local bar and then expect them to be there in a week? Maybe, maybe not. That's everyone's own opinion, but I guess that's the real life example.
So Steve, we're going to run out of time here, but I'd love to hear everyone's kind of last thoughts, last 30 seconds of what to look for in the charts this week as we're seeing BTC finally break that 10K event trigger. That means now we're moving into a new market regime. What are your thoughts on kind of what keeping your eyeballs peeled for this week?
Christina, I'm sorry, I didn't hear you the last question.
You cut out.
Sorry, I just said, what are your thoughts around what you're going to be looking for this week as we're heading into a market regime?
I personally will look at precious metals and equities. And despite, little blips where you had equities down slightly and gold up and Bitcoin up yesterday, I do think that in times of uncertainty, which I can say I've never lived in an era where many people are essentially in their house or in their city for extended periods, I do believe that Bitcoin and gold and equities did not rise by people selling them. There's been more buyers in the past few months or at a faster pace. So any real deviation where I see one market fall, that would be a cause for concern or a cause where I might take something off the table. So I tend to look at all three of those kind of in tandem, but that's just my 2 cents. I think it's worth noting. If you're watching Bitcoin, I keep an eye on precious metals and equities as well.
Thanks, Steve. And Dave, your final thoughts?
I mean, I think that I'm focused on Bitcoin and silver. Today, you've seen yet another. Silver's back up over 25. Gold is within 30, less than 30 points away from 2,000. And Bitcoin, we've been talking about, as we speak, it's at 11,235 or thereabouts, and basically wait a few seconds, it'll be a few dollars different. The reality is accommodative monetary policy is being, we're basically all being told that this is not just now, but it's going to be with us for a while. And, that bakes something very different into the cake. And so I look at this as, is this a week that we're going to see more follow through towards where we expect to go? And I do expect to see that. Now, that said, markets are very good at making people be humble. And anybody who goes out and stamps their feet and says, this has to happen, they generally end up destitute. I'm not one of those people. I will almost always hedge my bets. I'll put certain pieces of it. My biggest advice to anybody is to diversify and be intelligent. I'll come back to that Ampleforth that I pointed out to Steve. The thing about it is it was the biggest gainer on a bunch of exchanges for 2 or 3 days in a row, then became the biggest loser on the same exchanges for 3 days in a row. The thing is that there's a lot of people chasing momentum in both directions. And so it's really important to anybody who's listening to have very, very tight stops and to, make sure that they diversify their portfolio. That's really the most important thing.
Awesome. Thanks, Dave. Well, speaking of tight stops, we are out of time for today. So thank you, everyone, for joining us for Genius Wednesdays. Thank you to all the geniuses in the audience. Thank you to all of our panelists. And we will see you guys again next week. Happy research.